If you want to win big, absolutely bigly in traditional markets as a long-term investor, do this. This is going to be perhaps one of the most important pieces of knowledge, among the most important pieces of knowledge that I've learned in my long-term investment journey, and I want to be sharing it on this channel. And this is also classical market master knowledge as well. So let's jump right into it. Again, as the name would imply, this is heavily going to be about long-term investing. So if that's not you, this is not going to be very relevant. All right, as the lightning strikes in the background. Perfect timing. Anyways, many people believe in traditional market investing or just investing in general that diversification is the smart way to invest because it sounds right. You know, you don't want to put all of your eggs in one basket. You spread them out amongst many different baskets, and that is good because, well, one of them is going to hit and then you're going to be rich off of that. That is the idea. Intuitively, kind of makes sense, right? But in practice, does it actually make sense? Well, we'll get into that. Let's look at an example here. You own a diversified portfolio of the top 20 crypto coins or stocks or commodities, whatever it might be. Highly praised investing books and financial advisors especially commonly advocate for healthy diversification as a method of safely maximizing your gains and, more importantly, minimizing risk, because that's what it's about, minimizing risk and maximizing the gains, right? Why? Because you don't want to have all your eggs in one basket, and that would be risky. It's safer and protects you from market downturns. But is this true? Well, let's go through some of the top projects in cryptocurrency land. This channel is typically focused on cryptos, but you can apply the same thing to traditional markets, which we will do later as well. And I'm going to take you down. We're going to go on a walk down memory lane here, and I want to show you the top 15 coins in the crypto space by market cap around the top of each and every past market cycle. So we'll start with 2013. And I'm sure you'll recognize Bitcoin at number one there. You'll probably even recognize Litecoin and XRP. But for the rest of them, unless you're around during this time, you probably don't recognize them because after this year, in fact, maybe even not that long ago after this year, the shuffling of these top 15 massively increased. In fact, I don't believe any one of these is anywhere near the top 15 at this point. In fact, they're not even near probably the top 100 in all of these cases, again, excluding Litecoin and XRP. But that'll come into play a little bit later. Moving on to the next market cycle top, 2017. Again, Bitcoin, Ethereum, and Litecoin all on there. Very, very nice, of course. I think this is where many people also joined this space who are watching this channel at this moment. This is where I started to probably get a little more active myself. And many of these, you will probably remember from 2017, were touted as, the next big thing, right? We had NEO, which is number 14. That one went from, it was called ANCHARS before, and it was literally below maybe a cent or definitely below $1. And then it rallied up all the way above $200 and then back down. But that was going to be the Chinese Ethereum, it was a big deal. EOS, which had like $1 billion in investment at ICO. Where is it now? Nobody knows. Stellar is a sort of allegory or kind of like brotherly project to XRP. Not very popular anymore. Monero, which is actually one of the projects when I first joined, I was told Monero is like, that's going to be the one. Also not in the top 15 anymore. NEM, Dash, IOTA, Cardano. Cardano is still kind of around, but not in the top 15. All of these things shuffle and shuffle more. Going to 2021, same thing. Bitcoin, Ethereum, and XRP. Where is it? Is XRP? Oh, yes, XRP is there. So those three continue to remain there. Now we got some stable coins in the top 15. You even see Litecoin still there somewhere, very far down now to 15. But at least it's on there still. But again, remember in 2021, Terra Luna was going to be the big thing. Avalanche, Shiba, Dogecoin, Cardano actually on there. Again, not bad. Solana, of course, too. These things come and go. And of course, we have 2025. We don't really know if the market cycle is over just yet or not, but we do have the top 15. And you can see once again, it retains some resemblance to the past cycle, but not a whole hell of a lot. And this is, again, just the top 15. When we zoom out to the top 50, the top 100, the top 200, the top 500, it'll be unrecognizable. And these things basically most things go into irrelevance, which is a much worse death than anything else, to be honest. We can also go to the dot-com bubble and use that as a case study from 2001, 2002. And again, you'll recognize some of these stocks here. You'll recognize certainly some of these websites. Amazon, of course, that is the big winner, as we know now. eBay, barely now. Priceline, I don't even think it trades anymore. Yahoo, Lycos, Go.com, eToys, remember Ask Jeeves, Pets.com, that was the big one. That was the infamous one, really, that went to the absolute moon and beyond. Again, how many of these do you recognize now today that actually even trade anymore? Maybe one or two, very, very small. And that's just, that sector. When we go to the networking and infrastructure, when we go to media and communications, telecom, all of these were huge and up massive. Almost all of these don't even trade anymore, or they're just completely irrelevant. The only one that actually found that was still kind of around was Cisco, still trading under that ticker. And even Cisco, as I can show you right here, CSCO, it is still around, but you will notice something very, very characteristic about it. It is nowhere near, well, actually it's kind of getting near its 2000 dot-com high. But again, that's 25 years later, still hasn't made a new high. That's important. That's a very, very important feature. So we'll go back into our slideshow here. And we'll continue on with a point coming very soon. Here's some ancient knowledge directly from traditional market masters. Again, this did not come directly from myself. This is something that I have now internalized after experiencing it myself over time, which I'm sure anyone who's been around these markets now for more than 4 or 5 years can probably see this as well. And it is this: buy your winners and sell your losers. And I would prefer to rephrase this. I'm not trying to commandeer this, this knowledge. Of course, it's ancient. It's not mine. But I think it's better to rephrase it: sell your losers to buy your winners. Sell your losers to buy your winners. We'll expand on that a little bit later. But the picture that I'm painting here, when we go through that trip down memory lane, looking at past cycles, looking at both crypto stocks, etc., is that the winners win. The winners fucking win. That's what they do. The winners fucking win and the losers fucking lose. And very, very rarely do you find a loser that turns into a winner later on. Yes, it does happen. But when you're thinking in terms of investing long term, what do you want to put your eggs in? Which basket would you like to put your eggs in? The right basket, of course. No. You want to put your eggs in the basket that has the highest probability. So the ones that win early are typically going to be the biggest winners. They show you themselves very early on and with flying colors, and it's usually right in your fucking face. But there's a very specific way to pick a winner, which is what we'll get into now. How do you know who the winners are? If that's who we're supposed to, get into, or who I've found that, is best to focus on, how do you know a winner versus a loser? Well, typically in any new market asset class, which results in a bubble, everything rallies to the moon and beyond. Everything. So it's very difficult to choose a winner during that time. If we, again, go back to this slide here, if you were to go to 2013 and you saw all of these things rallying up into that major peak in 2013, you would have been like, well, shit, man, fucking Namecoin rallied up 1,000%. Bitcoin only rallied up 100x. That's got to be the winner. No. There's a very specific way to choose a winner with a high degree of probability. And that is, we cannot crown any winners in the first phase, in the first market cycle. It's too early. We don't know. We don't have enough information. What makes a winner is that they do better relative to the rest of the basket of their asset class. So what is that going to imply? It implies that we need another cycle. So we need a minimum of 2 cycles. The winners are the stocks, cryptos, commodities that rally again to new highs the soonest after the initial bubble wave passes. I'm going to repeat this again because this is the key point really of this, of this slide right here, but really of this whole spiel, in that when you're looking for winners, it takes a little bit of time for them to reveal themselves. Just like in the dot-com bubble, we know now that Amazon is the big winner, of course, as are a few others, but Amazon was a humongous winner. But in the actual dot-com bubble, we couldn't have actually known that because everything was doing the same thing, just fucking rallying to the moon and beyond. It's not until we get a turbulent season followed by success that we can actually crown a winner. And that's when there's a very high probability that the name, the asset, whatever you're looking at, that makes new highs the soonest after the initial downfall, that is going to be considered relative strength. Thus, it is a winner. It is very, very likely to be a long-term winner. So naturally, again, this will take time. In crypto markets, cycles have been coming and going every about 4 years. In traditional markets, it's longer, typically around, people have different ideas on these things, but 10 years-ish. Some people think 20 years. Again, you're looking for a big mania followed by a big crash, followed by who makes new highs soonest. And sometimes these things happen faster than those schedules. Sometimes they happen later on. But basically, anytime that you have a big crash, you have an opportunity to find who the winners are. That's the key point. When you have a big crash, so even the Rona crash back in 2020, when many things had very, very turbulent time, like you see right here on Bitcoin's chart. Sorry, it doesn't even look like much because it's on linear, but right here, yes, March 2020. The ones that rally back up soonest and then make new highs on that rally, that is relative strength. That is literally relative strength. So those are the ones to keep an eye out for. And those are the ones generally which are going to be the long-term winners, which in my experience is best to allocate, the overwhelming majority of my portfolio, if not all of my portfolio, to those things. So again, strength is measured and ranked in terms of speed and percentage returns above the prior all-time high. So yeah, speed is one, and then percentage returns above that prior high. If you have basically horses that are neck and neck, then that would be the next deciding factor. Which one's going higher relative to its prior high. I apologize about the lightning in the background. It is really, really loud. Anyways, in other words, it will take a minimum of 2 cycles to determine which has the potential to be a winner. Preferably, yes, you can kind of do it in a little bit more of a Frankenstein way, as I just alluded to here. You need a big crash. This one was not necessarily a cycle in and of itself, but whichever one rallied back up and ate up that crash soonest, that could also be considered an early winner as well. So moving on from there, here is the action that I would like to propose. You can actually buy into the initial hype wave if you really want. Like, think about 2017 for Bitcoin. You can buy into that. Go for it if you really want. But understand that when the dump comes, which is inevitable for all of these bubbles, dump your losers. Dump whichever things have not made new highs if you have something that already has made new highs. So whichever one makes new highs first, I will sell all of my if I was doing this strategy, I would sell all of the losers at that point and then go buy the winner. There's actually also a reason for this as well, and it does produce some advantages when you do kind of spread it out in this way, which we'll go over a little bit later. And then of course the other sort of deciding factor here, when you do have 2 horses that are kind of neck and neck, you can chart asset versus asset. So that's super useful, of course. Like if we're looking at Ethereum versus Bitcoin, for example, which one's going to be the big winner here? Well, how do you know which one's going to be the big winner? From cycle to cycle, does one make new highs and new lows, or does it make lower lows and lower highs? It makes lower lows and lower and lower highs thus far. So of course, Bitcoin would be considered the winner versus Ethereum. Or if we looked at Litecoin versus Bitcoin, we can also do some stocks as well, I suppose. Of course, Litecoin versus Bitcoin. This one's a very, very obvious chart. It's just down and to the right. So sometimes it'll look like this. This is extreme strength. But also understand that all of these things do come in waves and do come in trends. So there will be periods where, some random shitcoin outperforms the winner. That's very possible, absolutely possible. Same thing in traditional markets as well. If we were to look at, I'm trying to think of a loser in traditional markets, but it's not really coming to me right now, to be honest. I don't know. Let's see. What would be an example? I actually cannot think of one off the top of my head. If they're all winners. No, they're not all winners, but I can't think of a good example off the top of my head. But again, you're looking for the ones that just continue to win. If we were to look at some of the winners, I think it becomes very, very apparent. Meta, for example, formerly Facebook. Again, this one just goes up and to the right. Goes up and to the right. Good things rally. They go to the moon, and they don't really look back. It's a beautiful thing. It's an absolutely beautiful thing. Of course, we also have Amazon, as we alluded to earlier as well. Again, up and to the right. When we have something like this, it's making new highs very, very early on in the cycle. That's the winner. That's the winner. Allocate to the winners. Don't fucking overthink it. All right. Moving on from there, declaring a winner's case study. So consider the situation. Bitcoin rallies to new all-time highs. Immediately, people scream alt season and begin searching for alts to invest in because surely they must play catch up. Famous last words. Ketchup is bullshit. Ketchup is bullshit. It's a bad condiment with too much sugar in it is what it really is. Generally, catch-up is not the game that you want to play as a long-term investor. You want to find the winner that's already winning. Anyways, Bitcoin continues to rip and alts slowly follow, as they typically do. The leader sets the pace. You could apply this to, again, Facebook or Meta or Amazon, Apple, all of these big ones as well. Same thing. A rising tide lifts all ships. Your strongest ones go first. They rally first and make new highs. Everything else kind of gets lifted up from that strength. But that's where usually the major issues happen. At that point, people kind of double down. They're like, oh, well, I've seen these altcoins go crazy in the prior market cycles. They went, absolutely bonkers. Of course, it was during like the last month or two of that market cycle, which is when they actually do get some pretty massive bounces. But in these cases, are they even playing catch up at that point, or are the leaders just so far ahead of them that these are like the last gaps of a dying market cycle? Well, that's typically what happens. People double down on the alts, thinking, oh shit, they must rally up now, and then Bitcoin corrects and alts get hammered and they lose even more versus Bitcoin during that next major downturn. You've seen this a million times. We can look at some of the Bitcoin ratios here. It's just very easy for me to pull these up because, I look at these on live stream so I can see very clearly. There have only been 2 or 3 altcoins that have actually found that have even made higher highs and higher lows versus their Bitcoin counterpart from cycle to cycle. And that is BNB and I think the other one's an exchange coin as well. Typically they're exchange coins actually, which might be, that might be a questionable factor to begin with, but hey, for right now, that actually is the truth. Anyways, you can see Ethereum, Bitcoin right here, it's just lower lows, lower highs. You can see Solana, Bitcoin over here, lower lows, lower highs. Well, actually, as of right now, this one is potentially put in a higher low, but yes, it is a lower high, and I would imagine it probably does resolve with the lower low at some point. That is just the general trend. You got XRP versus Bitcoin here. You got Cardano versus Bitcoin here. You got Dogecoin versus Bitcoin here. You got Litecoin versus Bitcoin here. Again, the winners win and the losers lose. Over time, the winner just accumulates more versus that loser. It is a long-term trend towards zero. It is kind of a winner-take-all game. Yes, your competitors don't typically go to zero, but the winner just they eat up most of the market. Yes, there can be a few big winners. Absolutely. There's not just going to be Bitcoin in the crypto sphere. Obviously, there's going to be some other big winners, but Bitcoin relative to those, it's going to be very difficult to beat, at least as of right now. Again, over the long term. On any one cycle, you can get that, yes, but that does not prove it in anything in and of itself. It must be 2 or more. Anyways, the strong get stronger. Here you can see just the general strong ones in traditional markets. These ones hold up the majority of the weight in the S&P 500. I've also listed out some commodities over here and some other stocks. Gold, Bitcoin, Lockheed Martin is one of the winners in the combat space, as is Boeing, Caterpillar for industrials. These things just eat everything else up. I don't even know the other companies because they don't matter that much. They don't matter that much. So let me take a sip of this water while you marinate on those thoughts. Such a douchey way of saying it, but it is funny. Anyways, moving on. So then begs the question, should I sell the losers now? Not necessarily, actually. There is kind of an ideal time to sell losers. So there's a couple scenarios here. One is that if you plan to, or you already have realized capital gains from your investments during the year, during the tax year, then it's actually better to sell those losers at as great of loss as you possibly can harvest. Why? Because that will offset your tax gains. Because if you take a loss on, shitty losers over here, and you have big gains on your winners over here, well, those losses will offset your taxable income. So your effective taxable like base goes down, which is nice. And then of course you can go ahead, because you're probably not going to have like $0 left from that shitty investment. You're probably not going to have $0 left. You can go ahead and buy your winners. You just sold your loser to buy your winner. You sold your loser. You offset those gains a little bit. Then you went ahead and bought your winner, which is just gonna win more over time. Again, we're talking about long-term investing here. We're not talking about short-term trading. It's not gonna work in short-term trading. It's a lot more volatile on a day-to-day basis, obviously. But yes, if you can time that during the biggest market downturn possible, then you get the biggest loss possible on the loser. And then you go buy your winner at a discount, which again, it's going to be if it's already proven itself as a long-term winner, it's going to rally back up to, its prior high the fastest. Might not be necessarily fast, but faster than others. Therefore, it's a better investment. So you're also making money there as well. So you get kind of the best of both worlds in this case. Anyways, moving on, if you do not plan to have realized capital gains from if you do not already have realized capital gains and you don't plan to as well from your investments during the tax year, then you can sell up to $3,000 at a loss and offset your total tax liability. It's also kind of nice. Any excess is generally best done yesterday. Of course, better to sell yesterday than today. Don't fucking wait is what I'm trying to say. But at that point, it's better to just get into the winner immediately, sell at whatever price. Again, this is just my take. I'm not saying that this is exactly what you should do. As always, trust your own knowledge, trust your own, intuition about your own situation, because of course you are going to know your situation better than I, but I can share this as a generalized piece of knowledge that has treated me extremely well in traditional markets for long-term investing, and can also be applied to basically any market. And in that case, I will leave it there. Just kind of a short and sweet one for another long-term investment video. But again, the winners win, the losers lose. That's basically the gist of it. Sell your losers to buy your winners. When you sell kind of depends upon your particular situation for the tax year. If you really want to optimize things, but it's never necessarily a bad idea to sell your losers to go ahead and buy your winners. Again, this is coming in the context of very long-term investing. We're talking about realistically 10 years minimum in traditional markets or 5 years minimum in Bitcoin land. And ultimately, you can trust that this will work over a very long period of time. In the short term, yes, there will be ebbs and flows. So, don't get mad if you sell your loser and then it pumps up immediately. It can happen. Obviously, it can happen. We're talking about the very, very long term here. And again, it's more or less a winner-take-all situation. It really is. I know that sounds kind of maybe demoralizing to some, but it's no secret that there's really just a few in the S&P 500 that make up the overwhelming majority of the gains in the S&P 500, and the rest are kind of just barely holding on, gaining value versus inflation. So something to consider here, again, because long-term, well, it really does matter which ones you choose. Diversifying into a large basket, it's going to be safer. I mean, at least if you're going to diversify into ETFs, choose the winner ETFs. Choose the winner ETFs. That is why, it's never necessarily a bad investment to buy the S&P 500. It is a winner index. If you have to choose between this one and, the indice from some European country, for example, although nowadays they're actually doing okay. But still, this one's been making new highs for much, 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 much longer. So ultimately, this would be a great ETF if you do want some sort of diversification. Of course, you could do the same thing for one of my favorite sectors, which is triple Qs. These sorts of things. If you want diversification, you can diversify into something like this, I suppose. But generally speaking, it's really only a few of those stocks that are making up the overwhelming majority of the gains anyways. So if you can find those and get into those, that's actually going to be preferable in many cases. Not every case, but many cases. And so I just wanted to add that last sort of nuanced point here. So yeah, we'll end it on that note. As always, I want to wish everyone the best. Take care. Much love, and see you in the next one. And of course, if you're interested in more sort of videos like this, I'll be uploading more and more long-term investment sort of content as I get deeper in the game myself, because I'm still quite a novice, and I just want to document this journey as best as I can as I go onwards and forwards. So we'll end it right there. I'll see you in the next one. Take care.